Hey guys, it's Roger Ketchum. Listen, I just wanted to come on camera very briefly and remind you that I'm a real guy and not AI. But mainly, I wanted to wish you and your family an early, happy holidays. I pray that you guys are enjoying our 60 Seconds to Real Estate Success video series. We just wanted to show you some of the cooler components of creative real estate investing strategies. And we pray that it is helpful and insightful. Again, guys, I do pray that you and your family have a great holiday season, and we look forward to speaking to you guys again soon. Hey guys, welcome to another one of our 60 Seconds to Real Estate Success video series brought to you by the Common Man Plan. Today we're discussing buying with seller financing. You know, between seller financing and the subject to acquisition, these two strategies make up about 64% of all of our acquisitions. Guys, that's almost 2/3 of our volume are with these two strategies. Let me show you some of the things we love about seller financing. These are some characteristics that a lot of people may not even be aware of. Number one, an asset does not have to be owned free and clear in order for the seller to finance to you. In other words, they can have underlying debt on the asset and still seller finance the asset to you. Number two, any component the seller is willing to finance is considered seller financing, whether it's a small equity piece or the entire purchase price. And we have really cool case studies that we'll share with you guys sometime in the future should we engage each other a little further. But here's our favorite thing, guys. When a seller says yes, you were instantly approved for a loan of that value. I mean, when a seller says yes, you are instantly approved for a loan of that value. In other words, the seller becomes the bank. You now make your payments to the seller and not the bank. So no more getting beat up by the banks. No loan applications, no credit evaluations, no personal invasion, no high interest rates, no lengthy loan approvals. Guys, we do not have to put up with any of that bull stuff from the bank. Here's a couple of case studies. These are the last three deals that we structured via seller financing. 636 Pelican Place, the seller was asking $180. We agreed to $150. They negotiated $20,000 down. But Roger, I don't have $20,000 down. Guys, neither did I. But guess who did? Our private lender. If you missed the episode on private lending, go back and watch this episode. So our private lender partnered with us on this project with the downstroke that we needed. So the loan amount was $130 and the seller said yes. Guys, we were instantly approved at that very moment for a $130,000 loan without any of that bull from the bank. We agreed to a 3.5% interest rate. Try doing that in today's economy. So 3.5%, 130 loan, 130K loan on a 30-year mortgage. Guys, our payment to the seller is $584. We sold it for $9,000 down, rent to own. We'll talk about selling and exit strategies on an upcoming series, upcoming episode. We sold it for $9,000 down, $1,595 a month, minus our $584 to the seller. Guys, we were able to structure a $1,011 positive monthly cash flow based on the way we buy. You make your money when you buy. And that's after receiving $9,000 down. Guys, selling this thing on a 36-month rent to own, we profited almost $62,000 on this asset. And yes, that was after paying back our private lender, his principal injection and his return. Here's another property. This one doesn't look like much, but it's a nice 2,200 square foot brick home, 3-bedroom, 2-bath. But here's what makes this thing cool. It's on 7.11 acres. Guys, we bought it for $220. We had to put $25 down. Again, a private lender came in and funded this project with us. These guys are easy to find. They're looking for places to park their capital. So the seller financed $195,000 for us at 0% interest. Each time we made a $1,200 a month payment, that full $1,200 came off of the $195, 0% interest loan. Guys, we are in the process because this is an active, relevant, current deal. We're in the process by the time this thing closes on a 36-month rent to own. we will have made $134,000 on this project, or at least my client has. I just get a little tiny piece of that pie. So obviously, if he financed 195 and we made almost 135, there's a few more components of this case study that we're not able to share on this short video. But again, should we engage each other further, we look forward to sharing with you all the details of this case study and so many more. And finally, let's end with this one, guys. This is a 5-property package. Those 5 properties you see on the picture, over $1.1 million in asset value. Guys, we bought these with 0 down. Try going to the bank and buying $1.1 million in properties with 0 down. Also, we bought it for 6% interest-only payments. This gave the seller the income they wanted and still gave us the positive cash flow we needed. These 5 are in active transaction right now. So over the course of a 36-month hold, my client will make almost $200,000, and obviously we get a little small piece of that pie. Your success, guys, is our success, and vice versa. So we hope that you'll tune in on Monday, December the 1st, as we showcase more details, more of the comprehensive components of the Common Man Plan. But tune in tomorrow, guys, as we discuss the land trust, the power, protection, and privacy of the land trust. And let me just say this, the land trust is the most powerful tool I've run across since I was introduced to it in 2005. You do not want to miss this episode. Thanks, guys. We look forward to seeing you then.